What's up, guys? Welcome to Pippin and Dippin Academy's YouTube channel. I am Joe Von Grichton, and I got Hunter, the Pip Hunter Perquette, here with me.
What's going on, guys? What's going on?
I almost said Perquette. Like, isn't there like a famous celebrity that has it as Perquette? I don't know. Anyways, hey guys, if this is your first time here, welcome. Hit the subscribe button if you haven't already subscribed, and be sure that if you like the video, pound that like button, guys, because it will help us help other people just like you. With the YouTube algorithm and everything, they like when you hit those buttons. So, and we do too, as well as go ahead and write in the comment section. If it's your first time, say I subscribed. We'd love to chat with you. And then if you have any questions or you have comments about the videos, please put them in there. We'd love to get back to you as soon as possible on those things and help you out as much as we possibly can. Without further ado, today's video, I'm so pumped about because Hunter has been crushing. I've been crushing. Our students have been crushing on what we're going to show you today. We're just kind of going to simplify the whole process of looking for M's and W's and what makes a truly solid M or W pattern setup with a couple different tools. And with that, I'm going to hand it over to Hunter so he can share his screen and start showing you the sauce and show you how you can start like locking down some pips, guys. Just take them down like Pac-Man, just gobbling them up. So you ready, Hunter?
I'm ready.
Right on, brother. It's all yours.
I'm ready. So guys, I might be talking about, if you watch any of our videos, sometimes I throw more value in there that's needed. So get ready, because I'm sitting here staring at my charts. I'm gonna share my screen real quick. So what I mean, I'm gonna get rid of this, but I want to go to the higher time frame first, and I kind of want to show you just a bigger time frame view of what you're after. Okay, we've talked about this multiple times. Okay, and I'm about to show you from step A to step Z. You know what I'm saying? Like, guys, our YouTube channel alone can help you be profitable. You don't need I say you don't need a course and stuff like that. I think the courses these days are there's so much value on YouTube, right? And I'm not telling you to go binge on YouTube. What I'm telling you is to find one that you resonate with, that has a proven strategy, that has proven results, and stick with them, right? Because that right there is going to take you from point A to point B in Forex. Right? Because there's courses everywhere, right? It's the mentor you need. It's the person that you need in your corner that's pushing you, that's getting on live calls with you, that's trading live with you. Like this morning, we have right at 50 something members in our group, Joe.
Yep.
And I had one person on trading live with me this morning, and this dude shows up time and time again. Right. And if you guys can go back and look, today's the 14th, go back and look at the GU trade on in which I'm going to show you now. Go look at the GU trade, the sell, and he caught that all by itself. Right. And, inside while we were trading, I would, congratulate him, on calling the trade. And he tells me, I couldn't have done it without you, man. You're a great mentor. That right there alone tells me and shows me, it makes a warm feeling go through me, like I just been stabbed, but in a good way.
With goodness.
I mean? Yeah, and in a good way, because like you know how you get that feeling sometimes where you do something good and it makes you want to go run 5 miles. So that right there is what I'm talking about. It's the mentorship. It's having somebody in your corner, having somebody telling you it's okay to do this and do that. It's not okay to do this and do that, because they've already been through it, right? So let's get into the lesson. As you can see, are these support resistance zones? No, these are drawing liquidity. These are liquidity zones. Okay, as you can see, I don't care about anything here in the past. I don't care about none of this. Okay. Now, when the market starts to move in the direction and it's pretty current, like let's say that we were here and this was still here, I'm looking at that. because this is a double bottom. It was left, okay, and there's money laying here. This has already been taken out. I don't really care about this anymore. Okay, I want to know what's current. What are the current swing points where liquidity is laying that I can logically see where there could have been manipulation, there could have been a fast move away from that, and things like that, because I know that there's liquidity there. And you can know that if it was left, then you know price will go back and hit it, right? So let's just say price took out this low, right, and gave this good bullish candle, and we start to shift the market. What is our next move? What is our market after? That's what you have to ask yourself every day. What is the market after? And once you establish that, then you can go to your lower time frame and start to trade, start to make decisions about your trading, right? So as you can see, we did have a good bearish run today on GU, but my directional bias for right now, after it's done took in liquidity, and don't get me wrong, you know, everybody's wrong about Forex. You know what I'm saying? It's all about risk management. There are plenty of liquidity order blocks, things like that this price can come down to. There's plenty. But after I seen this and it pulled back in really quickly, I like to see that. I like to see that. Now, when I go to the lower time frame, Hunter's directional bias is bullish. For one, that big candle, we broke a bunch of highs, right? So that's good. So my next moves are bullish, right? But I want to explain to you why we had a good bearish run. As you can see, that we had some imbalances here. That when price opened up a new price, opened up a new candle, it just left. There's no wicks in here. There's no nothing. So that right there, my friend, is an imbalance, which price needs to come back and fill. And that's exactly what it done today. So if you're a counter, you've been worried about, oh my God, I'm losing, I'm countering, I'm losing. Guys, when you counter a trade, you need to understand where and what is below that to make that a profitable counter. Okay. I just wanted to throw that in. I told you I'd be throwing some value in without, I'm just, rambling. But this is a really good tip. If you have a pen and piece of paper in front of you, write that down, because a good counter is something that is below you that price is drawn to. If it's liquidity, if it's imbalances, or it's an order block. Okay. So you have to see that. You can see 1, 2, 3 good imbalances that were left. And that's why price was drawn to it. And this is the reason why that this was a good counter this morning. Now, one of our students took this sell. But I want to get into the real good meat and potatoes of what Joe was talking about, guys, is, there's all about trading in general is about being disciplined with your perfect trade setup. We've done numerous of videos about this, and I'm about to show you some tips and tricks on 2 trade setups that we're taking this week. Okay, during this week. So as you can see, I don't have to go back to the higher time frame. We are here. Our market direction was down. We were going after liquidity. Okay, so I want to show you. We were bouncing off this bottom, so it was a little bit of more of a risky set, but pattern recognition, the pattern is king when it comes to my trading plan. Same thing with Joe, same thing with our students, right? And if we are in a downward movement market, we're looking for M's, okay? We're looking for M patterns in a specific area, okay? And I'm about to show you that, because this right here will change the game of trading for you. I got the New York boxes on for you, okay? So let me do something real quick. I want to get rid of this so you can see. Okay, I don't trade London. I don't trade Asian. I trade this box only, okay? There's enough trade setups inside this one box, okay, guys, to be profitable all day long, okay? You don't have to trade both sessions to be profitable in this market. You don't have to trade 26 pairs to be profitable in this market, okay? You could trade in this one session and be profitable. So think about that. If you're not trading 25 pairs, you're not trading Asian, you're not trading London. That leaves a lot of good room for good decisions, right? It leaves less room for error in this market, right? Because you're steadily, oh, what is the market going to do? What is the market going to do here? What is the market going to do here? What is the market going to do here? Okay, so I want to talk about this trade here, and it works the same way as I just told you on the higher time frame. What is the objective inside of this day? We're looking at Tuesday. Okay, what's the objective for the market makers? The market makers are in this market to take your money, right? So the best way to figure that out is to watch price manipulate. Okay, so as you can see, and I'm gonna break it down to the trade, because this, as you can see, here's the top of Asian, right? This right here, my friend, is Asian liquidity. There was a high here and a low here, okay? And as you can see that we consolidated inside of Asian for a little bit, and then London made a low, okay? So we know that. We know that. We know that. And our market direction is down. I'm gonna put a black line right here just so you can see the low, okay? And when I seen this fast move up, okay, and it grabs liquidity of Asian, I seen this fast move. I was like, okay, I'm alert for one. It's inside my trading session. That's number two. Let me see if it's going to present my pattern. If it does that, and everything is beating up, guys, it's just like dissecting a bomb. If you were dissecting a bomb, you would take every precaution to dissect that bomb so you wouldn't end your life, right? Same thing. If you want to make money in this market, you're gonna have to dissect the bomb, right? So London made a low. It just took out Asian liquidity, right? We're inside of our trading session. Now let's break this down. What we did on this day, our market direction's down, right? We know that. What we did was we went down to the 5-minute on the 12th. And voila, okay? We went and grabbed liquidity, manipulation, okay? We created the M pattern right here. As you can see, it wasn't, we didn't go all the way back to the high. And everybody asked me, well, Hunter, why does it not always go back to the same high? Sometimes it just stops either equal or it's right there at the wick. Sometimes, guys, as you can see, they're still grabbing liquidity here. As you can see when it's at this high. When if it goes equal, they're still grabbing liquidity. Let me tell you why. Every time that it gets close to a high, watch price widen the spread. Watch the spread widen, guys. You ever think, well, damn, man, my stop loss was above there, but it still got hit. That spread is getting you every time, right? And they're still taking your money. So here's Asian liquidity. We bust, we grab it, we create the pattern. Left leg comes down. Okay, I'm going to draw this out for you. Left leg comes down, makes a right leg. I mean a neck, I'm sorry. Comes up, makes a right leg, comes back down. I'm not even going to put the right leg in so you can see. And everybody asks me, well, what's your entry, Hunter? What's your entry? This is the sauce, right? What's your entry? We're still inside of our trading session, correct? Right? So boom, this candle right here, I'm going to zoom in on this. And this, guys, the reason why we wanted to make this video is because entries shouldn't be hard. There's a lot of information about entries. Entries should not be hard. Entries should not be hard. It should be a quick and easy type of process for you. It doesn't matter. You don't have to do it our way. I'm just saying this is a precise entry because it's like, the 13 EMA, it closing below is a precise entry. You think about it, even if you got the close of the price, look at that. If you're going back to the high, it's only a 10-pip stop loss. Guys, that's a small stop loss. 10, 12 pips for GU, that's a good stop loss. You know what I'm saying? That's giving it enough breathing room where if price does start to consolidate, do a little more of accumulation and then drop, then you're good, right? So as price closes below, and typically, guys, these candles will be about, 7 to 10 pips. is a good rule of thumb when it comes to a good quality candle as far as volume. You see in volume start to move down in that direction, right? Even this candle here, okay? Even this candle here would have been a good wait for it to close. That is the key. You have to wait for that candle to close. If you do not wait for that candle to close, you're gonna get caught in a lot of trades that are not good, right? So as you see the candle close, we're back here. Let's just do this one. As you can see that the candle closed, okay? And I'm going to show you a trick, guys. This is the same thing I teach my students. Once that candle closes, get you an entry immediately, okay? Once that candle closes, I want you to put 2 limit orders, okay? So spread your risk up. If your risk is 2% per trade, and you shouldn't be risking no more than 1 to 2% per trade, there's no need in it, right? Unless you're doing some high risk trading, okay? Get an entry. Go 33% of it. You can even put the fibs on it, guys. Put the fibs on it and put 33% pullback. Get you another entry. Go to 50% pullback and get you another entry. Okay. So as you can see, you've gotten 3 entries on the trade. Okay. You're locked in 2%, whatever percentage you're in between those 3 trades. Split it up, and then you're locked in. You're locked in. You're locked in for the trade, and then I'm going to zoom back out, and you're like, well, Hunter, what's my target? Guys, we talk about this all the time. Your target is to target liquidity. You can see that flawlessly, okay, flawlessly, we came down, we accumulated, we got into Asian, right, accumulated. And the reason why, guys, I've got my Asian boxes all the way to when price closes and reopens is because sometimes I want that to be a part of that. The reason why I do that, I know London doesn't start until like 7 o'clock my time, but the reason why I do that because that just alerts me no trading in that zone. No trading. That's the reason why I do that. And it doesn't really matter. Price moves so slow, and those 2 to 3 hours doesn't even matter to me. I know that Asian's going to create a low and a high. Okay. So our target is below, correct? Which is right here. And you can see that it hit flawlessly. What's another area, guys? You can target what we always talk about. The double zeros and 50. That right there, that black line is 1.30000. Okay. And it hit it flawlessly. And you can see, look how price come to it, institutional level, and reacted to it. Sat on top of it for hours. Right? Doing what? Accumulating orders. Okay. So that alone, guys, is a trade setup that we take. So the real sauce, guys, is the entry that we talk about. Okay. And inside this box, inside that box, look for your trade setups inside this box. Okay. If it's 1 minute, 5 minute, 15 minute, look for your trade setups inside that box. Or if you're trading London, look for your trade setups inside of London. Screw everything else. That's what's getting you in some of the trades. Maybe that could be just the little thing that gets you over the edge of profitability is that little discipline rule right there. Right? Is being so disciplined with trading. Guys, this is 3 hours. 7 o'clock my time to 10 o'clock my time. 3 hours of trading. You're telling me I could trade 3 hours a day and make a full-time income and go enjoy my day? Come on. You know what I mean? If it got down, like, guys, me and Joe used to trade. We used to wake up at 1 o'clock in the morning and try to trade this whole thing. And it was nonsense. We were chasing everything. It was nonsense. It was absolutely draining us as human beings, draining our life. We were staying away from our families. It was not a great process, right? If you're doing that, stop. Because not only are you going to drain yourself, you're going to drain your banking account. And it's just not good. It's just not good. It's just not good. Like, guys, you can see here, like, you know, New York has its trades, London has its trades, Asian has its trades. Like I said, guys, we don't trade Asian. I don't care if it's an Asian pair with me. I do not trade Asian at all. This right here is just, I think, a way to trap traders. And then when we get into the great, you know, big time, big dog banks, London, New York, this is when they start to manipulate, and they've done trapped enough traders, they manipulate, and then they make real moves inside of these sessions. So I wait. And also, guys, I don't have to be at the charts all day, nor do I have to wake up for London. The reason why I choose New York is because I can already see what Asian's done and what London has set for the day. So now I have a low, I have a high, I have everything set that is in play, and now I can make my decision off of New York. Okay, so I can go back on a few more trades, like right here. Let's just take this for instance. If you're a London trader, okay, and you accumulate inside of Asian, and then you break down, okay, inside of Asian, and then you break down inside of London, and then what you're doing is you stop hunt, right? So let's look at this. You stop hunt first, you manipulate straight out of Asian into London, right? So your objective is to trade inside this box. Where's my pattern? You can even see 1.300 right here at that area, right? And so this right here would be a good counter, The reason why is there's numerous reasons why. You accumulated, you stop hunting low, you left imbalance in here, right? You left a high, okay? And then you created the pattern. Look at this pattern on the 1 minute time frame, April 11th. Okay, if you're a London trader. Okay, look at that pattern. Okay, perfect. Left leg comes up, creates a right leg. Okay, all these little small candles I'm not really interested in, so I probably would have waited. I would have waited for that bullish candle right there. And as you can see, that you got your pullback entry, and if you didn't get all of them, even pulled back even deeper into the candle, and you got your entries. So guys, if you're trading inside of this little box and your objective is to look for patterns, and your objective is to take profit at highs, you should have no problem making money in this market. No problem, right? You've done seen what it's done. You've done seen accumulation, stop hunt pattern. Let's take out this high, right? What kind of trade would that be? You guys, would you take 26 pips with only risking 9 pips? Come on. That's over a 2-to-1. That's over a 2-to-1, guys. That's over a 2-to-1 in just 3 hours. So think about that logically. I want you to think about that. If this pair moves 90 something pips a day and you just took 28 of it, you're winning. You're winning. I talk about this all the time. You're winning. Think about that. If you really thought to yourself, heck yeah, I just took almost 30 pips out of GU and it moved 40 in Asian, how much does it really have much to go? You know what I'm saying? And guys, it could move another 100. You don't know that. That's what I'm trying to get you to understand. You don't know that it's going to move another 100. Right? All you know is I just scored almost 30. I'm out. A standard lot size, guys, that's $300. People don't even make that in a day. I asked a kid, it's my wife's cousin's son. I go to eat at his joint all the time. He works at Shalosky's. I go there. Actually went there yesterday. They've got some great food, and I love food. And I asked him, and it was just me asking so I can train on with our students to make them really focus on the logic behind somebody making $300 a day in this market. And I said, how much you making a day? How much? Break down your check in a week's period of time. He told me he made $82 a day. $82 a day working at a fast food restaurant. And if you scored 300, guys, in our time where everything's headed now, come on, you're winning big. You're winning big. Is this market risky? Everything's risky in life. Everything's risky. Everything is. There's nothing guaranteed on this planet. Nothing. Except for one thing. You will go in the dirt one day. Right?
Well, and you'll pay taxes too.
Yeah, you got to pay taxes. But there's also loopholes around that too as well. We got to get with the right people.
Yeah.
So, yeah. Let me go back to here. But guys, it's simple. This stuff is simple. Even on Wednesday, I will go back to the daily time frame, and I want you to look that day right there. Okay, if you trade market maker, you know that in the midweek, we typically have midweek reversals, right? So as we took liquidity on the daily time frame, and as you can see that right here, when we took liquidity, it was on a Wednesday. I want you to pay attention to this on this GU rise. Okay, we also grabbed this trade that day too. Also, we called the GJ trade. You can go look at GJ the same day. A little bit more different setup, but I'll show it to you. So, but as you can see, we accumulated an Asian. We stop hunted. Okay, there's the stop hunt on the daily time frame with that wick, like I'm showing you. Okay, we rise. We create a high. We have a high here. London created the low. Okay. I want you to understand that, because you have to pay attention how price is predicting and setting the lows and highs of the day. Okay. So London set a low. We come up. I can see that London set a low. We accumulate a little bit more. You can see that this non-trading time, look how it accumulates. It's dead time, right? And then what's your objective? 7 o'clock my time, which is central time, is when New York starts for me. Okay. What's your objective? Your objective is to look for your pattern inside of this session, right? In the right direction. You've done seen that it's stop hunting. So we pulled up, we pulled back into it, okay? And we created a pattern inside of New York. Okay. And what is our objective? We have multiple highs here. Okay. If you wanted to take your profit there, totally cool. We have a high set here. We've got a high set here. We're at a low on the daily. We just took liquidity at a low on the daily. So, and you can see that this is if you're paying attention, like left leg, head, right leg, head and shoulder pattern, right? Over on a bigger scale. So if I went down to the 5 minute, and looked at that trade, look at that pattern. Okay. Now I want to explain something to you right here. Okay. Explain. Here's the left leg inside of right in New York. So we got, this is a 5 minute. So about right here. So 5, 10, 15, 20, 25, 30, 35, 40, 45. Okay. So that's about right. Inside of here, 8:30 Central Time, which is my time, is when equity hour opens. Okay. They will tend to stop hunt again inside that hour to take liquidity. And that's why we always say, wait for the second leg. Wait for the second leg on your patterns. The reason why is because you'll get caught in that little spike. And you're gonna, and the reason why is because you'll get caught in the spike, right? You'll get caught in the spike. It'll hit your stop loss, and you won't get back into the trade because you're scared of it, right? So look, left leg comes up, manipulates again, comes down back to the low, like I told you. right? Right on yesterday's low. There's the entry. I wanted to point it out to you again. Close above the 13. Let's just see how much this candle is. There's a 10 pip candle. Boom. Okay. Entry, 33%. Didn't get 50%, which is okay. Which is okay. Right? And then you start targeting what? Highs. There's 19 pips. You have a, let's just say, 15 pip stop loss. 19 pips. There's that high. What else can you target? There's that high, right? The previous highs. There's the yesterday's high. There's 50 pips. There. What else is your target? 1.3050, which is right at that high. Smoked it. Okay, and then you can even go further than that if you wanted to. You can go to 1.3075, or you can go to 1.3100, right? Which was right there, and it hit it flawlessly. Okay. So guys, you've been given, I just want to recap real quick. You've been given the entry part of it. You've been given the liquidity part of it. You've been given the session, the timing part of it. What else do you need? Guys, everything works just like how you do it on the lower time frame. Liquidity. I got these 3 things written down. The only thing you need to know in this market is liquidity, imbalances, time of day, and the pattern, and you'll be fine. And you'll be fine. And of course, the cycle. Because we interpret smart money, market maker in together, and it works flawlessly. It works really good together, right? Because M's and W's are a form of market maker, but we understand when they set up, because guys, there's M and W's patterns all day long in this market. If you took every one of them, your bank account your account will go to zero. You just got to know when to use them, right? Because they're really good patterns. So I hope you got a lot of value out of this video. I dropped a lot of good nuggets, and just this video alone could get you profitable just by me saying that you need to trade in just this session, just 3 hours a day. How cool is that? You know what I mean? So, or if you're in a London trader, you get to trade 3 hours a day, and then you're out of it. You want to pass the FTMO? Do what I'm showing you.
Yep.
You want to get funded $100,000? Ask our last student that just got past, or he passed the FTMO challenge. What does he do? He trades one pair. He trades one session. He trades one set. And he passed FTMO and got funded. He is now a funded trader and trades with prop firm money. Okay, so that's I'm done ranting.
No, man, that was good. That was good. Yeah,
I know I was a little all over the place, but I wanted to say all that stuff from the get-go, from the higher time frame down, because if I didn't, you wouldn't understand what I'm talking about on the lower time frame, or you would be trying to interpret right on that lower time frame. You'd be like, dang, this is not working, and the higher time frame is not meeting up with what you're trying to do in the lower time frame. So
yeah, and just to reiterate and summarize again, like what Hunter said, he said something really important at the end, which there's lots of M and W's that paint all throughout the day, all throughout every session. That doesn't mean that it's a valid trade. So for like some people, they'll say, oh, you find the M and W, you take the trade. No, that's not how it works. Because you got to know from the higher time frames where the liquidity zones are at, so you know where money is going to potentially go, right? But find those M's and W's, and then once you know the liquidity zones, you drop down. You can drop all the way down to the 5 minute. Sometimes people drop all the way to the 1 minute to get a really precise entry. The big thing is your M's and W's on the 5 minutes should see with the 13 EMA. You should see if it's a W, it goes down, closes down below, then it closes up, makes the neckline, then it closes back down, round like what he said, even. And then when it closes back above the 13, that's when it becomes a valid entry. But you got to confirm it with things like liquidity zone, right? Or tools like you saw in his chart. He has the TDI. There's also ways that you can confirm it with that. And then you know you have a valid trade. Taking M's and W's doesn't work, guys, if you just take them just to take them. You've got to understand liquidity zones and where those areas of values are. And then one last thing I'm going to add in, since we're talking about the 13 anyways, he gave you areas, target profit areas to go for based on liquidity areas, based on, you know, daily highs, double zeros, 50s and double zeros. The other thing you can do is when price, if for example, we're in a bullish trend, if price is above the 13 and there's separation from it, is you can stay in it until it crosses back down and closes, a candle closes below the 13. And if you saw what he was talking about, if you go back and look at those trades over the last couple of days, you'll see there's separation all the way up, and then it made a little M pattern and it finally closed below the 13. That's when you can exit, or exit when you hit your take profit. Remember, guys, don't get real good. Hunter said this time and time again, get good at taking 50 pips. 50 pips should be a 2-to-1 or more for most of you. You take down 50 pips, it's a great day. You do that all year long and you're going to build some serious equity. But without further ado, Hunter, man, again, great nuggets, great sauce, man. I love watching you do the chart markups. If you guys have questions, hit Hunter up, hit us up. Leave a question in the comment boxes. If you'd like us to do another video, a specific video, ask for it. It doesn't, the worst thing that can happen is we're going to say, no, we don't trade that way. We don't do that. But in most cases, we've had a few requests. We've made new videos on those. So again, guys, like Hunter said, it works. Hunter and I do it daily, successfully. We have students that are doing it. We have a student, our first student that just passed the FTMO. And now we've got all these students, like, we want to go do an FTMO. So they're using it now to get funded trading accounts, which is so fantastic. All right. It's not rocket science. Like he said, those three things: know your liquidity, know your time, and find your pattern. That's what he said. If you know those three things, you'll do fine in this market. With that, guys, Hunter, this was awesome, man. Thank you. Thank you. Go ahead and close us out, brother. And we'll see you guys next time. Hunter.
Heck yeah, guys. Keep pipping and dipping, and we'll see you on the next one.
Right on, guys. Take care. See you soon.